Tax brackets by entity. Sole proprietors and LLCs taxed as individuals use the personal tax brackets. 10% up to $11 million, 12% up to $44,625, 22% up to $95,075, 24% up to $182,100, 32% up to $231,250, 35% up to $578,125, and 37% above that, single filer 2023. S Corp pass through to owners, so same brackets apply. C Corp pay a flat 21% federal tax, but state corporate taxes range from 0% South Dakota to 11.5% New Jersey. Example, a C Corp with $500,000 profit pays $105,000 federal tax plus state tax. Fringe benefits. S Corp can offer health insurance, HRAs, and even gym memberships as tax-free benefits to employees, including owner-employees. C Corp have the broadest options: health, dental, vision, group term life, dependent care, and even tuition reimbursement, all deductible to the business and tax-free to employees. LLCs and sole props can deduct health insurance, but fewer options. Example, C Corp pays $15,000 for owner's family health insurance, fully deductible, no payroll tax. Business expense deductions. S Corp and SA Corp can deduct 100% of employee wages, 100% of rent, 50% of business meals, and 100% of office supplies. LLCs and sole props can deduct similar expenses, but must be ordinary and necessary. Example, S Corp spends $40,000 on wages, $24,000 on rent, $5,000 on meals, deduct $2,500, and $3,000 on supplies. Total deduction, $69,500. C Corp can also deduct up to $25,000 for business gifts per year. Advanced entity stacking. Imagine two LLCs. One owns real estate, the other operates a business. Both are owned by an S Corp. The S Corp receives profits from both, allowing income splitting and payroll tax savings. Example, LLC 1 real estate earns $100,000, LLC 2 operations earns $200,000. S Corp pays the owner $120,000 salary, takes $180,000 as distributions, reducing payroll taxes by $13,770 compared to taking all as salary. Home office deduction. For sole props and LLCs, use the simplified method. $5 per square foot, up to 300 square feet, 7,500 max. Actual expense method. Deduct percentage of mortgage interest, rent, utilities, insurance, and repairs. Example, 200 Samani Skeft office in the 2,000 discount home baggers is 98%. If total home expenses are $24,000, deduct $2,400. Safety. Keep photos, floor plans, and logs of business use to defend against audits. Business vehicles and depreciation. Section 179 allows up to $28,900 for passenger vehicles and $160,000 for heavy SUVs/trucks over 6,000 miles in 2023. Bonus depreciation. 80% in 2023, dropping to 60% in 2024. Example, buy a $70,000 SUV, deduct $56,000 in year 1, 80% bonus, plus regular depreciation on the rest. Keep detailed mileage logs and use the vehicle over 50% for business to qualify. R&D tax credits. Available to C Corp, S Corp, and LLCs for developing new products, software, or processes. Credit is up to 20% of qualified expenses. Example, spend $100,000 on software development, get $20,000 credit. Startups can use the credit to offset up to $250,000 in payroll taxes per year. Qualifying activities, prototyping, testing, improving products, not just research labs. Step-by-step, tax-optimized business structure. 1. Form an LLC for liability. 2. Elect S Corp status for payroll tax savings. 3. Set up a solo 401k for retirement. 4. Lease home office to business for rent deduction. 5. Buy a business vehicle, and use Section 179. Example, $150,000 profit, $70,000 salary, $80,000 distribution, $20,000 solo 401k contribution, $10,000 home office rent, $28,000 vehicle deduction, taxable income drops to $22,000. State-specific tax considerations: California, 8.84% corporate fees, 800 minimum franchise tax for LLCs. Texas, no personal income tax, but 0.375% franchise tax on gross receipts over $1.23. New York, 6.5% corporate tax plus city taxes. Example, an LLC in California with $200,000 profit pays $17,680 state tax plus 800 minimum. In Texas, same LLC pays dollar income tax, but $750 franchise tax if under $2 million in receipts. International tax strategies. U.S. citizens are taxed on worldwide income, but foreign earned income exclusion allows up to $120,000 2023, tax-free if you live abroad. Set up a foreign corporation. Profits may be deferred, but beware guilty tax, 10.5% minimum. Example, U.S. owner in Portugal earns $200,000, excludes $120,000, pays U.S. tax on $80,000. Use tax treaties to avoid double taxation and consider transfer pricing for cross-border businesses.